If you're looking to buy a property in Los Angeles or in Southern California, this series is going to explain what to expect and some of the pitfalls that you need to look out for. As always, if you have any questions about any of this, you can always text me or give me a call. My number is in my profile, or just comment down below on any of my social media and we can connect that way. The first step of the process in purchasing a home is getting pre-approved for a mortgage unless you are paying cash. You will need to gather some documentation up for your lender. Most lenders are going to need this information: the last 2 years of your W-2s, the last 2 months of your bank statements, the last 2 months of your paycheck stubs, a driver's license, and a copy of your social security number. If you have any other assets like brokerage accounts or 401ks, I would include that as well. Most lenders take anywhere between 24 to 72 hours in order to get you fully approved. Some lenders will go the extra step and get you fully underwritten approved, which means that you are already approved. They just need a contract and the appraisal on the property. Once you've done part one, which is getting a pre-approval for your mortgage, you're gonna set up a time with me to do a Zoom call or in person, and we're gonna set up a search based on your exact criteria. This is called a buyer consultation, and I like to do this because it really gets both of us on the same page of what is happening in the marketplace. I'm gonna set up a search based on your exact criteria and the type of financing that you're looking to get. This includes square footage, 2-story, 3-story, pool, no pool, area, and then I'm gonna show you some sold statistics so you and I can get on the same page. Because if properties in this specific area are selling for 5% less than their asking price, or they're getting multiple offers and they're selling above their asking price, you and I need to know that. The more information that we have about the marketplace, the better decision that you're gonna make, because it's gonna be educated in the facts in today's market. Once you've done your buyer consultation, I always recommend to clients start doing some drive-bys in neighborhoods. That is the fastest way to eliminate properties, because as soon as you drive into a neighborhood, you're gonna get a feeling of, yes, I could totally live here, or no way in hell am I gonna live in this place. Buying a house is all about a process of elimination. I always encourage buyers to explore areas that they might not have thought of, because it might reveal a really great property in an area that you hadn't thought of before. It's all about being flexible. Once you've explored areas and you have a few properties that you want to take a look at, just text me the address or the MLS numbers and I will schedule appointments with the listing agent in order to go show you those properties. Some of these properties will be available for open houses. I would definitely encourage you, if you're working with an agent, to put your agent's contact information down on the sign-in sheet, because you want to make sure that they are aware that you are working with an agent. Some listing agents and sellers have a limited amount of time where their house is available to show. So we will try to coordinate between you, the listing agent, and the seller on a good time to show the property. I would usually limit the amount of homes that you see in one setting to maybe 5 or 6 properties. After 4 or 5, they start to all blend together and it's really hard to distinguish the two. When I'm showing a property to my buyers, I always tell them to rank them from 1 to a 10. The 10 being the absolute best, the 1 being the worst. This is a great way to eliminate properties that are on a 6 or 7 scale versus the ones that are 8, 9, or 10. So you have seen a few properties and there's 1 or 2 that really catch your eye and you want to submit an offer on them. What I typically do is I'll go back to my office and I'll pull up comparable sales on that property. You want to make sure that when you're looking at comparable sales, you're looking at basically 200 square feet on either side of the subject property. So if the property is 2,000 square feet, you're going to look at properties that have sold in the last 3 to 6 months that are between 1,800 square feet and 2,200 square feet. You might extend that to 300 square feet on either side. The reason why this is important is because an appraiser is going to look at the last 6 months of sales and they're going to value it close to that same square footage. So if the property is 2,000 square feet, they are not going to use a property that was 3,000 square feet as a comparable sale, because it's like apples to oranges. You want to make sure that you're looking at properties that are comparable in the area that you're looking for. I will give you a price recommendation on what I think it's worth, but when you're in multiple offers, that kind of goes out the window. You can see somebody paying significantly more than market value right now because there are just not enough homes on the market. So you need to come up with a price that you are comfortable paying, and if you don't get it for that exact price and that was your max, then you know that that is not the right property for you. When you submit an offer on a property, you're gonna need some pieces of documentation. You're also gonna need your proof of funds for your down payment. So if you're putting down $100,000, you're gonna need to show bank accounts or brokerage statements that have your balance of $100,000 for your down payment. You're also gonna need the pre-approval letter from the lender and then the purchase agreement. The seller is the ultimate decision maker in a purchase agreement. So I like to get as much information from the listing agent about what the seller wants. Do they need a 45-day close? Do they need a 90-day close? Do they want to close quickly but have a lease back? Do they want to get rid of all their furniture because they just don't want to move it? Any of that information is really valuable, and I try to incorporate it into the offer because if it looks good in the seller's eyes, we have a better chance of getting an accepted offer. Once you submit an offer to the seller, there are a few things that could happen. The first one and the best one is that they accept your offer right away with no issues. The second option is they do a counter offer. You can have as many counter offers as you want. I've seen up to like 5 or 6 different counter offers just to clarify things and keep whittling and going back and forth. The third one is they could reject your offer. So there's a couple different options there. And the fourth one, they just don't respond at all. And I've seen that happen when you have a property that has 15 offers. They don't respond to everybody. So always make sure you're putting in your best foot forward, especially when you're in a multiple offer situation. Once you have an accepted offer, congratulations, this is exciting news. Now the real work begins. The first thing that you're going to do is you're going to wire in your earnest money into the escrow company. You will get wiring instructions from the escrow company directly, most likely, or from me. And there is so much wire fraud happening, so you need to be really careful before you wire in anything into a title company or escrow company. Here's the thing that you have to do before you wire in any funds. Call the escrow company and verify that information. A lot of times hackers are getting into emails and they are changing one number and it makes it look like it's coming from the escrow company with a fake email address, and they will send it right into their account and you will never see that money again. So it is really important to call and verify when you're doing wiring instructions for escrow. Congratulations, you have now opened up escrow. The next step of the process, you and your agents will start looking over disclosures and you will start scheduling inspections on the property. So typically there are 4 types of inspections I usually recommend on most properties in the Los Angeles area. The first one is a general home inspection. The second one is a termite inspection. Third one is a sewer inspection, and the fourth one is a chimney inspection. A home inspection will go generally throughout the entire property. They'll look at electrical, plumbing, foundation, roof. Some do chimney work, and they'll give you recommendations on talking to a specific person for that trade. Let's say, for example, there's a big electrical issue. They will say you need to talk to an electrician to better understand what this problem is. Or if it's a plumbing issue, you say, hey, talk to a plumber because this is a problem and you need to see what that is. So their recommendations are always to talk to a specialist. There are a lot of other inspections that you can get, but if you're looking to purchase a home on a hillside, there's a couple more that I would recommend. I would definitely get a structural engineer and a soils engineer to make sure that the land that you're purchasing on is actually solid and is not going to slide down in a landslide. And the structural engineer is an obvious one. You want to make sure that if you're on stilts on a hillside, that it is going to stay up during an earthquake. So let's talk about appraisals for a second. If the property does not appraise for some reason, there are 4 different options that you can use. Number 1, if the property does not appraise, you can lower the contract value to the appraised value. So if I'm representing the buyer, that's the one that I want to get. Number 2, if the property does not appraise, the buyer can pay the difference between appraised value and the contract value. Now, let's say it's $750,000 and it appraises for $700,000. You're only going to be able to get financing on that $700,000 value. So the buyer will need to pay the difference of $50,000 on top of their down payment. Number 3, the buyer can pay a little bit above the appraised value and the seller can reduce the price and meet somewhere in the middle. And number 4, you can cancel the transaction and move on with your life. If it doesn't appraise and you don't want to deal with it, you can just move on and get your full earnest money back. So let's say that you have a great inspection, you also have a good appraisal. You're gonna, at the same time, look at all of the disclosures from the seller about that specific property and general disclosures about buying real estate in California. The big ones that you're gonna wanna look at are the seller's property questionnaire and the real property transfer disclosure. These are specific to that property and they will outline any issues that they have had on the property. Your sellers are by law required to disclose any pertinent facts on these disclosures. But having said that, some sellers just forget or don't know, and the agents don't know. So you want to make sure that you inspect everything in the property really well on your own, so you're not relying on any kind of disclosures. If your property is in a homeowners association, you will also get to review the rules and restrictions and the financing of the homeowners association in order to make sure that you are comfortable moving forward. So if they say in the rules, no one named Felipe is allowed to live in this community, then you can cancel and get your earnest money back. I say that as a joke, but there are certain restrictions in certain communities that some buyers will say, absolutely not, I need to not live in this community because of that. It's really important in a condo to make sure you look at their finances. You want to make sure that they have enough money to do any kind of repairs for future in the property. So if they need a new roof in 10 years, how are they going to pay for it? If they only have $30,000 in the bank and it's going to cost $1 million, where are they going to get that money? From the homeowners. So they could do a special assessment, they could raise HOAs. These are all things that you want to be aware of if you're buying a property in a homeowners association. You have reviewed the disclosures, you've done your inspections, you've done your appraisal. Basically, the next step of the process is letting the lender do all of their work with getting the loan fully underwritten. They're going to ask you for a lot of documentation even after the fact. Typically, they will ask for letters of explanation, or they'll need clarification on a specific deposit that was not traced or a cash deposit. They're going to go through a list of documentation that they're going to need. If you're getting a gift from a family member, they'll also need a family gift letter. Any kind of financing issues that you have, you want to talk to your lender ahead of time. Don't move money around during the process. Always talk to your lender before you move any money, before you accept money from family. It all has to be documented, and the best way to do that is to talk to your lender first. Once your file is out of underwriting for your loan, your lender is going to send you what's called a closing disclosure. This disclosure is a document that outlines everything that they originally quoted you. If it's different than what they originally quoted you, they go back to the drawing board. The reason why it was implemented after the foreclosure crisis is because mortgage brokers were offering something really great, but then they would switch it at the last minute, and the buyers didn't want to lose their earnest money, so they got stuck into these bad mortgages. So this eliminates that bait and switch. Once you've signed your closing disclosure, you legally have to wait 3 days before you can sign your loan documents. Loan documents are typically signed in an escrow office, but because we're in Los Angeles and it's so spread out, typically a mobile notary is hired by the escrow officer to sign anywhere you want. After you've signed your loan documents, you will typically wire the rest of your down payment into the escrow company. Again, before you wire anything in a real estate transaction, you want to verify that the account information is correct by actually physically calling the escrow officer and verifying that. You don't want to send a wire with a lot of money to the wrong account because you will never get it back. And one of the last steps in the home buying process is to do a walkthrough on the property. This is to verify that the property is in the same condition that you saw, or that the repairs have been completed per the contract guidelines. You want to go through the entire property, turn on lights, turn on faucets, try the garage door. You want to make sure it's all in the same condition that we originally saw it in. After you wire in your down payment and the loan has submitted the entire money for the mortgage, then the deed will get recorded at the county. That process takes anywhere between 24 to 48 hours to record. Once the deed is recorded in your name at the county, you are now a homeowner and you can start moving in. For someone who doesn't sell a house all the time, this is a lot of information. What I like to do with my clients when I'm working with a buyer is to tell them step by step of what to expect. That way you're never surprised and you know what the process is going into it. If you have any questions about the real estate process, please give me a call. My name is Felipe Crook with EXP Realty. My phone number is 213-268-6832. Please connect with me here and make sure you comment, like, subscribe, and I will be more than happy to help you with any of your real estate needs.